In this video, I'll be talking about what is payable in accounting. So let's get started. Now first, we're going to be looking at the general idea on what is payable. So this basically refers to the money a company owes to its vendors or suppliers for goods or services purchased on credit. It's a short-term debt that is recorded on the company's balance sheet as a current liability. So it's basically me borrowing something from the supplier and saying him to pay the amount at a later date, for example, in a few months. Yeah. So now we're going to be looking at some key points about payables, all right? So let me just turn on my pen. And the first key point that I have is short-term debts. So short-term debt. So payables are obligations that need to be paid within a short period, usually within 30 to 60 days, which is 2 months. Then we have current liability. Current liability. So they are listed under current liabilities on the balance sheet as they are expected to be settled within the next accounting period. Then we have vendor invoices. So vendor invoices. So payables are typically associated with invoices received from suppliers for goods or services purchased. Then we have accounts payables department. Accounts payables department. So many companies have a dedicated department responsible for managing and processing payables, ensuring timely payments to vendors. Now, you might be wondering what is the importance of managing payables? So let's go ahead and look at that. And it is very useful to ensure that you're managing them. Now we're going to look at the reasons why. The first one is maintaining a good relationship with the vendor. So maintaining a relationship, that's going to be the first one, okay? So timely payments help build trust and positive relationships with suppliers. Now let's consider an example. Let's say you're the supplier and I'm the person who purchases from you. Now let's say if I don't pay you on time, then there could be some negative impression of me in your mind that this guy doesn't pay on time, all right? So yeah, so we'll have to ensure that we maintain good relationships with them. Then we have avoiding late fee or penalties. Avoiding late fee or penalties. So late payments can result in additional costs for the company because there are some vendors who charge you more money if you go past the date. Then we have improving cash flow. Improving cash flow. So efficient management of payables can help optimize cash flow and reduce the risk of cash shortages. Then we have accurate financial reporting. Accurate financial reporting. So proper recording of payables is essential for accurate financial statements. Now we're just going to be talking about some common types of payables. The first one is supplier invoices. Now this is the most common type of payable, which represents the money owed to suppliers for goods or services purchased. Then we have utility bills. So these are payments owed to utility companies for services like electricity, gas, and water. Then we have rent payments, which is basically owed to landlords for leased property. Then we have employee expenses. So these are reimbursements owed to employees for business related expense. And lastly, we have tax, which are basically owed to government agencies such as income tax, sales tax, and property tax. So that is basically everything on payable. And I hope this video helped you out. And I'll be seeing you guys next time. Peace out.